Okay, can everybody hear my voice and see my screen? Perfect. Mohammed, how are you? Fabian, what's up? Nate, how's it going? Lee, nice to see you. All right. Shelby, what's up? Okay, nice to see everybody. All right, let's do this tonight. You guys know the rule. Save some time. Okay, here we are. We are literally in the midpoint of the 90-day cycle. 45 days till July 1st. This is the halfway point, man. So where are you at? This is what it looks like. Okay, gone. We know. Wait a minute. Didn't mean to do that. I need a pen. Okay, so we're sitting right here. Today's the 17th. Gone. You should have about 45 days left from here forward. And then you're looking at July 1st. That's it, man. That's it. That's how time goes by, right? There's going to be June. Then I'm going to do this shit again in 90 days. And it's going to be going into the fall. And then you get into the holiday season. The year's a wrap. You got to make every day count, man. It's hard, but you got to do it. All right. Quick reminder. I said last week, I'm going to be off next week. No session for me on Wednesday. It's my wife's birthday. My kids get out of school. Got a lot of crap going on. I got to be around. So, hope you guys understand. I'll be back the following week. No issues. And we'll figure it out. All right. Quick reminder. Don't show up. Get pissed off at me. Sit here waiting for the session to start. Mohammed, you could sleep. I'm giving you permission. And we'll figure it out. All right, guys. Appreciate it. All right. We talked about the audiobook, blah, blah, blah. All right. So, I want to pass out some congrats. I don't have permission to use these people's names, but they're in the group and they might have posted and you guys might recognize it. But if you see them, give them an attaboy. This was actually one of the girls in the group. She got funded 100K and she's working on her 200 next. Very exciting stuff. I love seeing that. There's a certificate that goes along with that. And if she posted and made it public, that's up to her. You guys can give her a shout out to her in the group. All right. And then another guy got funded. Good stuff. I've never heard of this company before. I guess you could let me know if you're in here tonight. Let me know if they're paying out, how it works out. This was back in May 8th. Good stuff, man. I love it. I feel like almost like, I don't know, like a proud father. Is that kind of weird? I'm old enough, I guess, to be most of y'all's father, but it's exciting, man. It makes me like happy. I tell you the guys all the time, I had to bang my credit card up and get more money out of my house on the HELOC. Just different times, man. Should be very excited to be able to have this kind of cash available to you to trade and following some rules, man. So, which reminds me, some of you guys are like going over your loss limit for the day and doing stuff. Man, that's unacceptable. Some of you guys are getting funded and doing stupid shit. Okay, I can't help you with that, but here's the mentality, and we all grew up with it, and maybe even I don't know if it's more so now, but it was bad in my generation, man. Like coaches getting in your face and yelling at you, like get back in there and fight the good fight, and failure's not an option. You know, failure. Hey, somebody else got funded. Said I got funded 100K today. Can I say your name? Just put a quick Y or N. Okay, cool. It's Gloria. Gloria got funded for 100K. Congratulations, man. I'm proud of you. But anyway, I'm talking about like some people got funded, they were doing okay, and they blew themselves up. From what I understand, there's a $7,000 to $10,000 draw daily, and then it resets at 5 p.m. or something. Okay, well, how the hell can you go over that and blow an account? It's stupid. The deal is that the mentality that's been ingrained in us is to keep pushing until you come out on top. And man, you need to use a 3-trade model, win, lose, or draw, and that number has to be under the 7 or the 10 or whatever the actual loss number is. And to be honest with you, you should set the number at 6 if it's 7 and 9 if it's 10. Why? Because you don't know if you're going to get slipped, not filled, and they're going to put you over. Their job is to take your fees. That's how they're making money. Okay, and then when they hand you an account, from what I understand, it's demo. until you prove yourself for real. Then they secretly switch you to real money. So they're making money on the fees. The fees are to burn you out. So set a loss limit $1,000 below what it is, especially if you're trading 10, 15, 20 lots. That's a couple of ticks, man, and you'll go over the number. 3-trade model, if you got a $6,000 loss limit for the day, divide that number by 3. 2 times 3 is 6. $2,000 is your stop level. Take the $2,000 times 3, $6,000 take. That's a 3R trade. Remember, I talked about it last week. The stop times 3 is the R value, right? Risk versus reward, RVR, whatever the hell you want to call it. Reward versus risk, some people say it. It's simple stuff, man. Okay, so the idea is to figure out the numbers and get rid of that attitude that, oh, I got to get in there and keep fighting until I win. Well, the guys that are riding me that are blowing up keep fighting and they blow their account, man. And it's happened a lot more than I'd like to see it, I guess. The attitude is, right, stay away, live another day, trade your limit, call it a day, whatever. We got to make up some kind of slogan or something. You need to write that shit down on a sticky note and stick it to your forehead or your upper corner of your monitor. When you're just under your loss limit, end it. Come back in 24 hours when it resets. And if you had a bad day, even take a day off wouldn't hurt. If you have a rough day, Monday, Tuesday, and you're in trouble, take Wednesday off and come back Thursday, Friday, man. It's simple and it's easy to say, but it goes against, yeah, live to trade another day, man. It goes against the mentality that we're ingrained in us since kindergarten, man. You know, you got to be excellent. You got to make straight A's. You can't fail. Failing is blowing your account. Getting stopped out in this business is part of it. That's not failure. That's you made a bad choice on a trade or trade didn't go how you planned it. That's all. The market makers had something else in mind. They needed more money at a book level, at a lower level, whatever it was. That's not failing. Stopping out is not failing. You need 6 out of 10, 60% with 2R or 3R. 3R makes it easier because then if you lose 2 trades and you hit your third, you'll be up for the day because you lost 2R, right? If 1R is the stop and you're trading 3R, you lost 2R, you hit 3R, you'll be plus 1R for the day. It's math, man, and patience and calmness. That's part. I can't teach that shit. I could sit here and draw circles on the screen and show you the numbers all day. I can't teach you to walk away when you hit your loss limit. That's why I told you, like, I'd love to invent a platform that just does it for you, shuts you out. And some people say some have controls, but I know how it's supposed to go, and I would love to program it, but no one's going to take that platform. No one. No one will probably even take the feed. Let me have the feed for it if I wrote it myself. All right, enough of that shit. Let's get on to the good stuff. Congratulations, you guys. Proud of all of you. Gloria, thanks for letting me say. Good stuff, man. Congratulations again. I hope you make 100,000% in the next 12 months. All right, so listen. Last night, they're handing it out like candy, man. 15-minute chart, 6B contract, which is the GBP USD equivalent to futures. I've been treated more fairly at futures, getting good spread, small commission, and I'm happy. That's why I switched. I had a lot of problem with Forex. Some of you guys remember, like back in 2014, I got kicked out of FXCM. They sent me a letter and basically told me to go screw myself. They don't want my business, and they sent me a check, my balance. So after that, I bounced around, tried one out of California. Can't remember the name of it. Maybe ATC or something. They were okay, but come to find out, they were fed by FXCM. They were white label. They got rid of me. So what are you going to do? I've had good luck with these guys. There's a lot of good old established Chicago Board of Trade futures dealers, and it's been good. All right, so anyway, here's the deal. Perfect W formation, right? You come in here, you draw the apex nativity thing, get the top of the body, the wick, stretch this out into the future. If you notice over here, these are the profile things I talk about. But you have to understand that there's a high volume to reject this down. And when it goes down and breaks back up, the high volume stayed roughly in the same area. So I know this is how I learned how to draw the boxes, understanding that I'm encapsulating the high volume nodes, which is the point of control, right? Time at price, time at price. So I take that and I take these two POCs and I would draw a line, I want the one that's going to be closer to price action to go limit, because they may not come back down to this one. If I was to draw a subzone in here, I would take this point of control and this point of control and go like this. And that would be another micro zone, right? Out into the future. What I want to do is I want to front run this by a tick or two. And because they don't really screw with the spreads and futures, I can go one tick right here. And I get filled on the taper. And that's it. I got the trade. This is crazy to me. Like, you literally take your fibs, right? And this is the only thing I use fibs for. Muhammad, this is it. This is all I use fibs for. The rest is eyeballs. All right. I take this swing low to this swing high, and I use the extension, right? I pull back here, get this swing low, and I have my top side projection. Once I'm in the trade, things are moving along, stops to break even. Now I want to know what the upside is. Okay, 63. If you're taking a fixed number, 50 or 40, and this is greater than that number, then just let your numbers play out. Let your target hit. Okay, I want you to notice how price went up to the AR number, the moving average, and the day open. You could have shorted this down into the lows, but I felt like this W formation gave me high side bias. And you don't know if you're going to get the retracement down how far into the lows. You can bet it's either going to turn here or maybe somewhere a little deeper into the lows. So you go upside bias on this, man. I want you to notice something crazy, right? You got moving averages pointing down. You got shit everywhere. You got blue trace. You got all this crap. All my favorite stuff. But at the end of the day, if you're getting the counts correct and you're seeing things clearly, the pattern, anchor low, zone flip high, trumps everything, man. That's the bottom line. You like to have stuff to lean on and confluence? Yes, absolutely. Give you more confidence in the trade. But you get a W anchor coming out of session. I want you to notice something too. Let me clear this off real quick. Sorry. Okay, this trade went off in session. This part of the trade went off in session. Do you understand? I always talk about this. People are getting smoked in here. You got to wait for in session, man. So if you're getting started, you're trying to nail down your hours, you need to go from here, right? Show up in the middle of the box, do a couple of checks, wait for them to hit their stride, run the stops, make the formation, trap short, right? Failed seller's auction, they don't take out the swing low. I like what I see. There was a sub trade in here, right? A hammer flips over the POC, another hammer, go in right there, or go limit here. Excuse me, go limit there. And you got about a 35 pip run in that. Maybe you could have squeezed out your 25 or 30 if that's what you're going for. No worries, it's a good trade. And then you're off to bed, right? Then look over here, in session. The trade goes off in session. The W formation's in session. And there was a trade here. First leg, pull back. You would have got maybe a measured move from here to here, and you would have tried to get 30 out of there. There's two moves in there. But this is the big play. This is the 15-minute play. You could drop down to the 5-minute, maybe get a smaller W to work off of. That's okay too. But you want to be using this pin, right? This pin gives me the same exact zone that the point of controls give me. You see that? Look, first rejection gives me where the points of control are. Slide this shit over here like that. That's the same exact shit I drew off of some ridiculous indicator that's hard to get, and you got to have tick feed and with data. It's not necessary. That's where I came up with this stuff, right? And I forgot to mention, I've been talking about these book map stuff, and I got the videos tonight. I'm excited to get to that stuff. If it starts getting too late and I'm blabbing too much, I'm going to skip all the shit and go do those videos, because I've been promising that shit for a couple weeks. Hold on, let me get a drink. All right, man. Good stuff, exciting stuff, love it. And you notice how price broke above the open, tapped the open, and basically hugged right back at the open. So what does that mean? In 24-hour currency cycle, price opened to close exactly in the same spot. There was no change. You either got rich or got busted, right? Bottom line. You can't make this up, man. It's there every single week. I like to say every single day, but you don't always get clean W's. And you know the A-frame, how to handle that. We talk about that stuff. And if you're unsure, I'll cover it again in a couple weeks. Send me an email, say, I don't know what the hell you're talking about. And if you don't know what the hell I'm talking about, I'll do it again. All right. So I got some student submissions, excited about this stuff. People basically said critique my shit, and they're in for it. Okay, so look at this chart in like 30 seconds. Tell me what the hell's going on with this dude. Okay, you see his strings in here, right? He's got a trade in here that worked out okay. He's got this one. Tell me what you guys think. Tell me what could have been done better. Yeah, that's anxiousness getting in too early, man. I agree. That's exactly the problem. So, listen, if you don't get a pullback below or above the catch-up, then you need to try to deal at the bottom side. Okay, first of all, we know that you're going to get a bounce off the 200 EMA. This is a 15-minute chart, 200 EMA, right? What's the bias for the day? Upside. Okay, we can go with that, right? You get straight away coming right out of the session. Then you draw your lines right here, here, and here. What do you need to be a stop hunt high drop? You need an M formation that comes below this, hits the 50 EMA and gives you sell side, first target, if there's enough money in there to make any money, and then somewhere below, heading towards the lows, right? This is yesterday's low. Then you would get my blue tracer trade that I love into the lows. Okay, that's not the case. You had everything showing, straightaway trade, no visible stop hunt, right? Coming off of a low side anchor. Price breaks above, he gets the hook back. Not a bad entry. I would have liked to see, this is the actual trade, all right? Let me erase so we can be crystal clear. This is the actual trade that I like here. Okay, stop hunt high, right? You're trading above Asian numbers. You expect stop hunt high or stop hunt low. Draw your line like this. There's your first rejection pin. Refine the entry. Right there, you're getting in on this bar somewhere, mid bar, right there. That's the perfect pull with the stop right there. Okay, he got in a little bit better or a little bit later. That's okay. And he went limit. Perfect. Good target right here using the 200 EMA. Perfect, because you don't know what it's going to do. Okay, he was excited. He had some money in the bank, and he scratched out and messed himself up. So here's what he needed to do. It's laying right on the friggin' moving average. Look what it's doing. Don't you see all that bottom pin rejection? They're trying for lower prices, but the dealers are not having it. Trying for lower prices, dealer are not having it, right? So what you need to do is box in the pins. Can't say this enough. Box in the pins, man. Okay? Box in the pins. There's your box, right? What do you got here? Now you're in session. Now you're in session. Okay? Now you get stop hunt low, rejection, move up higher. When they break this right here, right? When they take out this level, the dealers want higher price. Try to deal from the low side, this pin, and I would even been happy if I saw that. Right? You needed something to give you some context. This apex nadery thing took out the swing low, swing high. Higher dealers want a higher price. He had a good pull. He just too conservative, whatever the reason was. All right, hope that makes sense. It becomes down to patience, man. I've been doing this too long, and the rookies and the younger guys are too impatient. You got to let this stuff play out. The greatest thing you could do is learn to use limit orders, and I'm going to tell you why. You either get filled at the right spot or you don't. And that's okay, man. You'll figure it out. If you start refining these entries, right? You got this first pin rejection right here, literally on the 200. You can't ask for a better area than that. There's a body, body's up high here, body down low here. Let's just take an aggregate roughly. That was an awful aggregate, but you guys get the message. All right. You go buy limit right here in the box, front of the box because it's thin. Box less than 10 pips, front run the box. Very top line. The box is a little greater. Try to refine the entry on another pin. Okay, simple. 10 pip or less box, front run the box. He would have got filled here on a front run. Stop could have been right there, and he would have had that nice trade to end the day. That's it. And I'm not picking on you, brother. Nothing but love, especially for sending it and having the guts to let me look at it. Okay, same thing. What happened here, man? Same thing. Tell me, Muhammad, what happened here? Okay. If you got a moving average and a blue tracer together, this becomes your zone. So he ain't wrong here, right? This is good. Okay. This is where your zone is. This is a pretty damn good M where I come from. All right. How do you handle this? We want to deal topside pins. Okay. Well, the friggin' 4-hour demarcation line is sitting right there. You're trading below the 4-hour. This is a 4-hour high from somewhere else in the world. When I say somewhere else in the world, I mean over here, left side. Okay. So now, what's the best way to trade this? There's one or two ways he could have traded this better. First of all, he got a decent pull, right? This is a decent pull. I don't like it because it's on the no-go side. Remember I talk about go, no-go? He's on the no-go side. He don't have anything here. That's not right. What happened? If you think about this, the parameters said high swing here, low swing here, right? You don't know he's dealing on something that's not the low swing yet. And he still is above the blue tracer. You know that they break out of the blue tracer and do that. That's my favorite trade on the freaking planet. But he doesn't know they come back in and stay inside the blue tracer for a couple of bars until after he's already in. So he screwed himself up. This broke down at this point right here. This is a 50-50 proposition. You don't have a trade here, man. Right? When they close again inside the tracer, now you're on to something. This would have scared me. So you split the M in half and you're on the go side. Okay, so now how do you handle the go side? Okay, he got in. I don't like to deal off the M anymore. I like to deal in certainties now. Okay, so I would have drew the blue tracer as the top, and I would have took the apex nadery thing, and in this case it's the nadir. I would have put the box out into the future, and I would have went sell limit in here. And I would have got the perfect fill, US in session, and it would have been good, right? So here's what happened. He got a good fill, stopped himself out too early, screwed up the trade, and then he had to get it back. What the hell is here? There's nothing here. He's coming into the end of the session, and look what they do. He's got a couple of positions on. He took a few stabs at it. They hit the stops high, hit the stops low all the way down here, and they wiped him out. So now instead of having a good trade that if he would have just did a little bit better management, he would have made his money here, end of session, right? If he would have stayed right on the tracer short and left this better stop management, he would have been in a good place, man. Instead, these guys smoked him, and I hate that. Hate that shit. Okay, so apex nadir, draw the box, refine the entry maybe off of here, right? Off of these bodies on aggregate, go limit right here, stop above the tracer, couple of pips to breathe. He would have been in a good place. And he would have got these two, within 2 or 3 bars, he would have probably had limit. So 60 pip box, 30 pips halfway, he could have got probably 40 out of here. Right? He got 2/3 of the box available to him. And he had a limit here too, and he would have been right. It's not from this trade. His limit was over here, but still, it's just patience, man. And how do you? I can't teach you guys that. How do I teach somebody to be patient? I could sit here and complain about it all day. He had everything he needed right here. He had a sell zone. This was the perfect sell zone. Why is it a sell zone? Because price is coming from below. If they would have got above this, then it's higher price. That's the buy zone. Top of the blueberry or some zone somewhere in this area, depending on how they're showing you the configuration of bars, right? This is, look, this is consolidation right here. This is the same thing. They never retested it. He would have had higher price. They retested lower price. That's what you have to do. Bracket these areas on the chart, consolidation, and see how they handle it. I told you the whole business could be summed up in this little circle right here. But it's just understanding what you're seeing, right? We want to be in line with the bigger trend or understand that this is possibly a reversal zone, but they ran the stops low, trapped, and then came all the way back, triggered everybody out above the high, and then they handled their business and went back into the range. This is basically a chop day, right? This one didn't open where it closed lower. So this would be a weaker close on the daily, right? Closed, if you draw a daily candle, I'm losing it with the ink tonight, sorry. Okay, if you would have drew a daily candle of this entire movement, right? This would have been the high, this would have been the low. Daily candle looks like this. right? Maybe rejected off the low, closed over there, would have been some shit like this. That's the daily. Okay, well, we're closed down here. It's a red daily candle. So we know that this is a weaker close, possibly lower price tomorrow. That's it. It's all there, man. It's all there. All right. This one freaks me out. All right, critique this for me. Go. 30 seconds. I'm going to take a sip. Just tell me what you got. Okay, not quick enough. Come on, man. All right. Okay, look. You got moving averages. You got a predetermined head and shoulders, right? He drew this shit. I didn't draw it. Okay. He's got the blue tracer, break above. He had upside bias from everything. And this freaking guy took a short right there. Jesus Christ. I'm sorry. I don't understand. Do any of you guys understand that? He drew the zone. The zone was good. He could have refined the entry off the low pins first leg. He could have went limit here. This isn't bad. Obviously, damn straight you got a late entry. And you got the wrong entry. Sorry, brother. I love you. I don't know what the hell's going on here, man. But anybody, anything to say? I don't know, man. I would say, yeah, he saw a 12 trade short, but look what he drew. He knew a head and shoulders is an absolute reversal long in this instance. And if it's over here like this, it's a reversal short. This is probably GBP. I don't even have to look at it. This is the pattern they make. This is like GBP's signature pattern. I could go back in the charts, find this shit everywhere in GBP. If you just hung around and traded this the right way, you're in the plan, right? He got this apex and every box pretty great, right? Maybe I would have took the tops of these bodies and expanded the zone a little bit like that. And then I would have tried to refine it. Here, erase it out, see what I'm talking about. All right, so he had this high swing, tops of these bodies right here, which would be basically right in here, right? So he could have went like this, expanded his zone, and that would have caught the entire range, right? Because they always repeat these areas, and this is not a very big wide box. Okay, box is less than 10, front run the box. Box is greater, try to refine the entry off the low swings, right, off the pins. This right here, maybe catch some of those pins like that. Okay, front run the inside box. That gives you a damn near precise entry. Depending on your lot size, you may or may not got filled because of tapering on the candle. So if you're trading 20 lots, you go in pair of tens, or you go 5, 5, 5, and 5 on the ticks. You get your 20 off on the spike into the low. They fill you at each sell. Remember the sells. They fill you at each sell on the spike down, right? Instead of trying to get 20 off in one sell, you might get rejected or slipped. But if you get 5, 5, 5, you have an aggregate entry 2 pips lower. You understand? So you eat into the spread a little bit. Because what will happen is you'll go here, 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 and here, and your aggregate comes halfway between the pairs of 10. All right, so anyway, for what it's worth, I know shit happens. I know that's life, but this is crazy to me. He did everything right on the analysis, and he executed incorrectly. That's it. That's all I could say. And if you're here, I'm sorry. I love you, man. But I appreciate you sending this to me. All right, what else we got? Okay, a couple of flashcards someone sent. I actually think I'm going to skip all this and come back to it next week. And because there's some good trades in here, but I want to cover the videos, man. I got about 15 minutes left, and I want to talk about these. Okay, so here's what I'm going to do. Got to get some Diet Coke going. Here's what I'm going to do. I'm just going to let it play, then we'll go back over it and talk about it. But this video is titled Slippage, and I want you to see what that looks like and see if you can spot it for me, all right? Okay, I'm going to shut my mouth and run it. If I can find the play button on here. All right, I cannot. What the hell? No, don't tell me it's not going to work. Maybe I got to get out of here and get a cursor. I'm using the ink. I'm using the ink right now. All right, hang on a second, man. It worked when I tried it, and now it's not working. I don't even know what to do. Let's see. Well, that's no good. Okay. Okay, let's see. All right, there we go. I had to get out of ink. I'm sorry. Here we go. Okay. All right, just watch the slide. We'll talk about it. I'm going to shut up. Bye. All right. So this was the non-farm payroll equivalent in crude oil, which is called the inventory release. It's every Wednesday. They release the amount of oil in the ground and above ground and what's coming in. It's basically crude oil on hand, right? It used to be, this video is a little bit older. It was when it was $50 a barrel roughly. Okay. This is the old school book map that I actually learned on and I really liked it. So what you have here is these white lines are the liquidity that's available in the book. Black is nobody's home, man. There's no orders in the book. Okay. So what they do is they roll in and they press price on both sides, right? Pressing, they keep it flat and they start letting it creep up a little bit to get it to where they wanted it. They let price, they put some liquidity here, it pulled up to it. There's black around it. Some orders got executed on the way. Then it positioned itself right in the middle of the blocks of liquidity. And then they pulled all the other stuff out of the book except for retail traders that are in there. Okay, everybody with me so far? Quick why. Okay, right at the release, they withdrew all the liquidity out of the book. It just stopped dead. Notice how the book is completely black. When I play it forward a little bit, I'm going to back it up and play it some more. I want you to notice these numbers. This is the actual orders in the book. I want you to notice how slim they get. I also wanted to know if you noticed, and I'll back up to it. Let me see if I can back up to it. Okay, look how thin these orders are now. It's 949. These are retailers, man. or idiots, where I like to call them, trying to get filled. I want you to notice like these bubbles are actually executed orders in the book. I want you to notice the bubble slipped all the way down to here, right? Somebody might have clicked a sell up here and they got filled at the worst possible spot. What happened was the bubbles, if you notice the green ones and stuff, they're sliding on the screen through the price points because nobody's picking up the order. You have retail traders can't pick up your order unless they match it, but the dealers want those orders. So they fill them at the worst possible spot where there's a higher number of liquidity in the book. That's why news trading doesn't work, because you don't know who's going to pick up what because you can't see this crap. So where's this part at where they slip the bubbles? I love that. That's what the slippage is. I think it's right in here. Let's see. Okay, right there. Do you see that? Damn it. I tried to stop it and it bumped to the end. You see, I know you saw it. You saw the red bubble that slid all the way down here. Somebody sold and it slid all the way down to the next available dealer order and he filled it down there. And they paid the price for that because now they're in the hole. If they didn't get stopped out, they're in the hole right there. They slipped it. And then look at these green ones slipping. People are buying and they're slipping at the next available seller. Look how thin these are. These thinned out in the profile, man. It's just crazy stuff to be able to see it. I love it. But that's why when people go, I don't know, I pulled the trigger at 62 and I got filled at 22 or 28. And this is a decent move for crude oil. This is like 75 cents. But if you notice what happens at the end, it ended up exactly where it started. There was little net change in crude oil price, right? But they beat the shit out of everybody. It comes the rest right in here. And it started at 49.58. It spiked up to around 75, 76, right? Because you got nothing traded at 76, a buy order at 75. That guy got trapped. Draw a line right across here, basically the same. 56. This went off around 60, 4-cent difference. And it traded all the way down to quarters, right? 26, right between the 26, 25. So with the spread, 25, right in there. It's crazy stuff, man. You gotta love it. Okay, another one. I'll just be quiet and then we'll talk about it. Actually, let me preempt it. This is the new version of the book that's not white, and it's the same thing. The deeper, darker orange or dark reds, that's heavy orders in the book. The white is weaker, blue obviously less, yellow, and it emerges into the darker deep colors. This is a very high order up here. And the next gradient down, I think this was euro when it was $1.12. Look at the numbers in the right margin. Nothing. Empty. Sorry about that. I think I made that off my phone, man. I know it bounced around a lot. But look, this is where the Pac-Man idea came from, right? That's a Pac-Man. So what happens is you got retail traders buying high when they see it spike up, they get excited, think it's going to the moon, they buy, and the market makers just scoop that up like a Pac-Man. They bite those buy orders and sell. The selling pressure all the way down, right? This was even. They absorbed this level of liquidity, right? See how that was orange and it turned to nothing. Orange, gone. Spiked right through it and took it. All right, this means heavy liquidity in the book, medium. They use the medium volume to control the price. Right, so again, medium volume because there's not a lot of people home. Doesn't take a lot of money to push the bubbles around when no one's in. They could eat up 21, 8, 3, and 2, and this is hole in the book, hole in the book. They just push it right down. And whoever retail is clicking on this shit, right or wrong, he's either winning or he's losing right now. But some people got jammed up here. They had a bunch of liquidity up here, and they Pac-Maned it. Right? So they just pull the liquidity out, price skyrockets, and then they put it back in, and it just halts price. And if they put enough, right? If there's 100 orders, they put 200. It just forces it down, absorbs it. Anybody else clicking in, and they just drop it. Bounces off the low swing here, comes all the way back, and basically ends up not too much different than where it started. It's fascinating stuff. By the way, this is the 50 EMA, and people might have taken that for a 50 bounce trade, and they would have been long. They would have been in a good spot, but it would have been quick, man. You don't take a position right before crude oil inventories. People do it. It's not the best idea, man. All right, I'm going to skip ahead off of this video. I'll do it next week, but I want to talk about this. This is basically an M formation. So this is where I came up with understanding the boxes at next level, man. We're drawing these boxes and understanding what's going on. This is how I came up with it, because this is the original book, and this is where I started drawing boxes. If you could see, the liquidity draws that shit for you. So it started making sense to me that drawing the boxes on the swings and understanding where the confirmed buyer auction and seller auction is confirmed into the next level is why I stopped taking unprotected M's and unprotected W's. Okay, so let's talk about this. All right, so what do you have? Asian range consolidation. They break out to form an M formation. Okay, so here's the deal. You take the Asian range, right? They press it, right? You take these two boxes. I need a pen, sorry. All right, this is gonna be the last chart because it's a quarter till already, and I'll pick this up next week. So you literally just take this like this and draw it out into the future, right? And the low swing over here. So this would basically be your Asian range. Then they break out and start the M formation. Okay, so now I have my M, all this liquidity is in the book. This would be the high swing off of these two boxes of liquidity. And I expect price to come back into that. When it doesn't take it out, this is a failed buyer's auction, right? They can't auction price higher, it failed. Price, you get your turn bar, price turns down. Now, I got the high swing and I got the low swing. So if you notice, I could take these levels from here and I could extend them out into the future where liquidity was in the book, where it was previously pressing price. And that's equivalent to drawing this shit off of here. So if you look at this, let me erase. If you look at this right here, price went in. See that little tiny black spot right there? That got wicked into there by the spread. Okay, so that's the low swing. So if there's a wick right here, you're going to take that, you're going to aggregate the bodies, you're taking this previous liquidity from the top, and you're going to draw a box right here, right? That's where I came up with the box. When you look at it in candlesticks where they make these turn bars, right, I could do the same thing here. I could take the high swing off of the boxes and understand that I have the two areas of interest right now where I want to deal from. Okay, if price comes down here, it's got to get below the last place. It's always the last and current place that the dealers tried to make a move, right? The dealers tried to make a buy run. They got capped on this heavy liquidity, right? I call these insurance. They put in some liquidity, and if it slips through, they got this and this to make sure that their level is not given up. They don't give a shit about 5 or 10 ticks in the scheme of things for them. They care about getting the turn bars in the general area, but they rarely fail when they got this kind of power. Right? This is a collective of banks agreeing that crude oil or whatever it is, GBP can't be any higher than this swing high today. You don't think they know mathematic computated formulas where the high of the day and low of the day are going to be roughly come in? Would give or take some plus or minus 10 variance, right? For slippage and for unaccounted order fills that come in. Okay, so the high swing, they push price down. They push it back up. This is the last place the sellers tried to take the book out and couldn't do it. This is the last place the buyers tried to take the book out and couldn't do it. So you got failed buyer's auction, failed seller's auction. So what has to happen? If this is a good M formation, you're going to go here and here, sell out through there. That's your secondary entry after the M formation. This is a confirmed M now. Why? Because the sellers finally got control of the last place they tried. If this does this, and what it would really do would break above the high, come back into here and go higher. What does this mean? That the buyers finally got the book back from the last place the sellers took them out. That's how this box theory came to be. I told you the story about this thing. I got this in 2014 from another student, and I sat with this thing and could not put my finger on it. It's impossible to read. I mean, you see all those bubbles bouncing around, all this bullshit going on. It wasn't until after sitting there for like, I don't know, a week or two, that at the end of the day, I came in and I squished the pages together, and I could see all the lines and boxes where they got pulled and turned black, and they got put back in the book. And I started realizing, okay, I see this M formation crystal clear. What happened here? The liquidity blocked the high swing. They had a failed auction back to the high. There's the apex nadery thing. And you could look at the previous area of liquidity where they actually this extended the box right here. So they had a place here where they tried, they failed, they got pushed up, they failed. Now if they get below it, I got something. Then it goes down to the next liquidity targets. Then you have to see, right? In your mind, you should easily see this. You should see, okay, if price breaks here, right? Let's draw a box here. And it's a rough draft. I'm running out of time, right? It should do this and it should do that and fall through the black areas, no liquidity, nobody home, easily glide through the black areas on the book. Then it would do this. This is mildly deep, but maybe then you got your three pushes and you get your low. Then we should see something like this maybe. Back the other way if this is the reversal. So now you see there was liquidity here and liquidity here. You got this over here. You could take this out into the future and know that you got a little area right here. Whatever price action did here, if we rejected before, then it went up and tried and it would do some bullshit like that again. I know this is hard to see and translate, but this is the understanding. I want you to understand where the boxes came from and why they're so powerful. I didn't just pull these numbers out of my ass and start drawing boxes on a chart. It's based on what the dealers are doing behind the scenes that you can't see. I've always said this since the beginning I started teaching. You got to look at this stuff from behind the screen. You're here on the screen. Let me draw you a little hanging out, right? Sitting in front of your computer. You got to think about the feed that's coming in, and that's this stuff right here. That's the backside feed. You need to understand what's going on behind there to be able to execute on the front side of that screen correctly. And when you understand where this box theory came from and understand what I've been talking about for the last couple of years and try to increase your odds of not taking a failed M or a failed W. I still get stuff. Steve, I took the W's and got busted. Okay, where did you take the W at? Okay, well, you possibly took it down in here before you had confirmation on the apex nadir. You even need a close above this. You can go here, but you're usually going to get a hook back, suck back into the book because it'll push through where there's black, and then it always sucks back to liquidity. So if I had a W like apex right there, it would go like this. It would break it, eat up this liquidity, would turn black, and they'd come back to this level here and possibly give you a secondary entry. And that's this chart from the very beginning of time today. That's how this comes from. This, I got to erase my ink so you can see it. Last chart I'm going to talk about and it's over. All right, that's where this comes from, right? This was now picture all this crap in the book, right? Okay, they broke it. They probably hit some liquidity here, wasn't absorbed yet, turned it, tried again, got a little bit higher, came back, spiked in here. So this is your primary thing, and this is your 1, 2 refined entry because it's off of here. Yes, some people would have got in here thinking they missed it and they would have chased it up here and they would have been sorry. It always comes back to the heavy's liquidity. Time at price. Look, that's liquidity. Rejected the first try, they hit it again. So what they did is they basically ran the stops off of these guys by that candle. All right, see you guys next week. Love you. Hope you enjoyed it. Congratulations, everybody. I will see you guys next week. No, I will not see you next week. No class next week. All right. Good night. Appreciate you.